Right, let's get going. Okay. Okay, I've been away for a week, and it's very interesting turnaround actually. The dollar started to correct back, and it's interesting that we're now starting to see a recovery in euro and sterling. Now, the key fact that we need to consider is this the beginning of the sort of corrective move on the dollar? And we can see here that we have started to see this move probably engaging in the biggest correction it's had since it really did kick off on the run higher through mid-April. So the longer this move continues, the more questionable I think that the market will be on this medium-term dollar recovery that we've had. And what is driving this move? Well, in the last sort of few sessions, we have started to see the data turning around for outside the US. Previously, we've seen the US pretty much being the main driver of positive data surprises and strong data. But last week we had the Eurozone inflation data surprising to the upside. We've also seen positive surprise on the UK services PMI. So we're now starting to see the data starting to turn around a bit outside the US, and that I think is an important factor, because I think that has been one of the main drivers behind the dollar strength, whereby in recent months we've had US yields rising, yes, but also we've seen the yield differentials in the US favour, but that is, interestingly enough, starting to sort of show a little bit signs of turnaround. Now, you can see here, for example, today, 295 on the 10-year US. That's up from 292 overnight. But if you look at the German numbers, the German 10-year yield has jumped from, what's that, 369 up to 44, so it's 5 basis points. So US yields have only risen a couple of basis points, 2-3 basis points. German yields are 5 basis points. UK gilt yields are also 8.5 to 3.8. So again, another 5 basis points. So we're starting to see, and certainly this is, I mean, it's obviously not necessarily a long-term thing, but it is interesting to see that yields outside the US are starting to sort of pick up more strongly than Treasury yields, and that is going to play a factor in driving underperformance of the dollar, and I think is sort of helping the euro to outperform today. Now, why is the euro outperforming today? Well, suggestions came out yesterday that the ECB is ready to sort of talk about the end of the asset purchase program. Now, that's important because that really does start the ball rolling on the winding down of QE. Now, that is the key factor, I think, for the second half of the year, and one of the reasons why I think the euro will sort of perform much better relatively in the second part of the year, and why certainly throughout much of Q1 and into through much of the last sort of couple of months, we've seen the euro underperforming because the data has been so weak, the inflation numbers have been so disappointing. But we're starting to see a bit of a turnaround, and that could be the fact that could be a key factor in sort of driving the euro higher. Now, what we see on the charts is that euro dollar has bounced, and we've seen the breaking of that downtrend and a breakout above resistance. Now, the resistance in the last sort of week and a half has been 117, sort of between 117.10 and 117.40, 117.50. Now we're breaking strongly through that today, as the comments from ECB chief economist Peter Pratt suggested that we are seeing, we're going to see the ECB sort of discussing the end of the APP program. Now you can see here on the hourly chart that's completed a base pattern above 17.50. So euro dollar is breaking out to the upside. So that's important. But I think the euro, in terms of playing the euro, we can sort of gauge it in the fact that general risk appetite has been positive. So subsequently, the yen has been underperforming, and you can see that on the board today, where dollar yen is higher, but euro dollar is strongly higher. So that would suggest euro yen is very strongly higher, and it is 0.8% higher. And euro yen is really sort of pulling higher, look at those number of strong bull candles, which are really sort of turning around the sentiment. And look at those momentum indicators, which RSI accelerating above 50 at multi-week highs, MACD lines and stochastics. MACD lines crossing higher, stochastics similar outlook to the RSI. So this all suggests certainly buying into weakness, and I think that move above 129 figure on euro yen is a key level. So sort of one of the trades that I'm going to put on is at, oh no, I should be buying at 129 figure. Sorry, that is a mistake. 129. Look at that. Spot 0 0. So yeah, I think one trade to look at is euro yen, but another one is euro CAD, and I think that the Canadian dollar is also suffering. And you look at dollar Canadian, it is trending higher, and you do have a bit of a pivot near term above 130 big figure. 130 big figure has been a bit of a level previously, obviously a big round number, and I think it is again becoming a bit of a supportive pivot. So any sort of move towards 130 big figure seems to be on dollar Canadian a sort of a near-term buying opportunity, with the fact that the outlook generally looks towards sort of moving higher within this sort of ranging position. So if you're looking at euro dollar moving higher and dollar Canadian moving higher, then euro Canadian should be trending higher, and what we're seeing is broken the downtrend and building a base breakout. Now the base breakout has not yet been confirmed. You want to see a move above 152.25 on a closing basis ideally, and then that completes a small base pattern. But again, this is a key sort of move, and look at the momentum indicators. I talked about this in the morning report today. Big break of a downtrend already confirmed on the RSI. MACD lines crossing higher, bullish signal. Stochastics also pulling higher. Now the fact is also that I think that the stochastics rising above that April high suggests that it's something more than a similar move that we got in April, which was just a counter trend move that got sold into. I do not necessarily think, I mean, you've got the trend line which is being broken now, and that comes with the moving average, the momentum indicators breaking higher. You haven't quite confirmed a move above 125.25 today. You had a move to 152.25. You had a move to 152.40 yesterday, and again today, just backing away slightly. But again, if you do see a move above 152.25 on a closing basis, that is a really positive signal, I think. And that's why I think I'm going to be looking at buying into Euro Canadian as well. So I think that there is certainly a positive development going on in the euro. Is that also being seen on sterling, though? That is the question. Sterling dollar, again, yes, it is at the moment. It is sort of, you had that strong move to the upside yesterday on the services PMI data for the UK. Also today. Now 134.50 is the key level that we need to look out for on sterling dollar, because this has been previously a floor of the January low, and then became a floor of support in May as well. So having broken that, that becomes overhead supply. But if you see a move through 34.50, then that would suggest that we are certainly turning around. Above the 21-day moving average, that hasn't been seen since the market sold off. You're seeing the momentum indicators sort of increasingly positive as well. So sterling dollar is also turning a corner. So is sterling dollar turning a corner against sterling yen? Well, it's coming up towards a key downtrend. And that key downtrend is Well, obviously coming after we've posted several strong bull candles in a row. So this is a really strong confluence, because not only that, you can see here this blue line, that is the underside of the old key uptrend channel. So that is a big confluence level. You tend to see old trend lines, once they've been broken, become flip round to being the opposite. So subsequently, an uptrend, once it's broken to the downside, subsequently becomes resistance. So we've got that level being tested on sterling yen. So sterling yen is pushing to sort of break through these two trend lines. And again, if sterling yen can do that, then it would reopen a move towards that 150 level. So sterling yen again is sort of improving quite strongly. So we're seeing that nice move to the upside on sterling yen as well. So it's another one you can start to think about if you get those two trend lines broken to the upside. So let's look at putting on these two trades. We've got Euro Canadian, Euro CAD, there it is. It hasn't yet. I mean, what do you do with Euro Canadian? Let's just have a look at it. Do you put it on in front of that? Well, I sort of look at the fact that the downtrend has been broken. It's not confirmed yet, which is the concern I do slightly have with Euro Canadian. But also I think that it is now forming higher lows. So you've got that support at 150.90, and you've sort of dropped back to 152 figure. I think I would like to buy that at 152 figure. I think 152 figure is a pretty decent entry point on Canadian. Buying at 152 figure, and you'd have to stop just underneath 150.90. So 150. Was it 150.90? It was, wasn't it? Yeah. Well, I say that. I did see earlier that there was a pivot around 150. Sort of 152, 151 area. That support from yesterday. So you could argue you could put that 150.90, which is around about where that support comes in anyway. So 150.90, 150.90. Place that. Okay, the other one I was going to do is Euro Yen, and Euro Yen I think is it's a pretty decent uptrend again, and it has gone a little bit away from 129, but I really do like the breakout above 128, 129 figure, and I think it does tend to sort of unwind on an intraday basis quite consistently. So I think 129 figure is a pretty decent. If you look on here on the hourly chart, that is around about, well, the hourly chart comes in at still way below on that uptrend, way below 129 figure. So you could easily see an unwind to 129 figure. So Euro Yen, you do a pending buy limit 129 ... You'd have your stop at, I've written here 127.90, because 127.90 again, there's a bit of a pivot around 128 figure, and it gives you a little bit of room. I think 127 under that pivot, so I think 127.90 is a pretty decent pivot, and that would be also below all these moving averages. Look at this hourly 89-hour moving average, which had been resistance and has become supportive. So, and that's at 128.19. So that would be below that as well. So you wouldn't necessarily want to be in it once that was broken. So you do 129 figure and 120 790. But yeah, it does look as though it's pretty decent there. So I put a couple of trades. Targets. Thank you, Gordon. Good question. Targets. Right, I was going to talk about this. So we've got those. Right, so target on Euro Yen. I think 131.35. These two highs here from May are pretty decent. And again, what you do tend to see is that's an old level as well, an old pivot. Look at that old pivot, 131.35, consistently throughout sort of late 2017 was a very strong pivot actually. So and became again once more. So I think a move back higher towards that could easily be seen with these momentum indicators strong. So that's euro yen. So let's put that in. Actually, I should have done that, but I did it. So 131.35. So you want take profit at 131.35. Modify, and you'll take profit on euro CAD. Yeah, I think you look at this as a base pattern. So you'd measure the base pattern. So let's say 150 big figure from the bottom of that left hand low, measured up towards 152.25, 225 pips. And what does that mean? That's from 154.50, and that takes us back to this pivot around here, pretty much on the nose. So I think 154.50 is a pretty good target on that. But as I said, you can sort of look at some sterling pairs which are beginning to turn the corner as well. Depending on your outlook for the Canadian NAFTA agreement talks, which sort of seem to take a bit of a nosedive on the announcement that the US was trying to play for bilateral agreements, markets may take that as a bit of Canadian dollar underperformance. You've also got the oil price, which is sort of falling away. Again, you can see the Canadian dollar potentially underperforming now. Look at the oil price. It's just broken that uptrend, isn't it? Well, it's broken that mini downtrend, but more importantly, it's broken that long uptrend on WTI. So that's not great development there for the oil price. So it suggests sort of selling into strength, really. I've spoken previously about gold failing again a couple of times at 1300. Again, downtrend intact. It's not a massive amount of selling pressure through gold, and that's probably because of the fact that we've got trade agreement, trade dispute problems, and geopolitics sort of having a big factor in market sentiment still potentially to blow up. So that is, I think, helping to prevent gold from selling sharply down. And also, I suppose you could argue if the dollar starts to not perform so well, which is perfectly possible if the euro starts to sort of rally higher, then maybe that prevents gold from selling sharply down as well. So that's why I think that the momentum in this gold sell-off hasn't really sort of taken on yet. But I still see a downside bias, albeit marginal, on gold on the technicals anyway. So yeah, quite a lot there for you to sort of go on, really. Let's have a quick look at the DAX, because I did do the DAX a couple of weeks ago when I last spoke to you, and it did end up hitting the 1260 target in its bounce. Now, sorry, 12600. We've seen that bounce, and is that bounce sort of falling over? I've sort of on the DAX, I'm a little bit concerned about this 21-day moving average, really. Having been supportive, it's sort of turned into a basis of resistance and starting to roll over. Momentum indicators, yeah, ticking higher slightly, but it's sort of turning into more of a rangy market. I mean, I'm still positive above 12,600, to be honest, and but I don't really see that as a decisive chart anymore, having broken that downtrend but then failed at the resistance. That doesn't fill me with a great deal of confidence that this is going any sort of significantly higher. So yeah, there you go. Lots to go on today, as ever. So yeah, you can join me again next week. We're going to be doing the traders webinars again. We're going to probably do Tuesday and Thursday off the top of my head next week. I couldn't do payrolls webinar because I was on holiday last week, so I apologise to all of you who missed that. It was fairly positive payrolls report, but yeah, so I'll speak to you all again next week. But thank you very much for coming again, and I will we'll reconvene then. Thank you.